Hello, it's Wednesday, March 27th, 2019. I'm Steve Houston with Compass Communications, and I'm here again with Joe Terrell of Terrell & Company. We're going to visit a little bit about the markets and investing. And Joe, the first quarter is getting ready to end. It started off like gangbusters, but of late there is trepidation about the world economy. What are your thoughts?
Well, there's no question, Steve, that towards the end of last year, November, December, investors all over the world became worried that we were going into a worldwide recession and the world economy was going to be poor. Therefore, business would be poor. Therefore, they were sellers of everything. January came along and people began to rethink that, and maybe the other side that didn't agree with it began to think at these prices investments are bargains, and we saw a very nice rally right up until the end of last week. The end of last week, some of the economic news out of Europe that came out on the surface of it looked bad. And here we are in the last 3 to 4 days, right before the end of the quarter, with people back to the world economy is going to fall apart. We're going to have a severe recession attitude. As we've said in written comments, and we disagree with that. We do not see the world economy going into a severe recession. We do not see the United States economy going into recession. And therefore, even though that's back to the thinking of this week, we disagree with it.
Okay. Well, let's talk interest rates, because interest rates have been plunging worldwide. What is going on there?
That's a fascinating thing to see, and of quote unquote all of the monetary experts and people around the world, that economists, etc., a lot of them are scratching their heads saying, why is this happening? Why do you see 10-year bonds in Australia at all-time record lows? What's happening here? I want to offer what I think is probably one of the primary reasons is with all the money that has been created by central banks around the world, particularly in Europe and Japan and places like that, with the tremendous money creation, it's got to go somewhere. It's got to be invested somewhere. And therefore, it's not a matter of was this a good interest rate or not. It's a matter of, well, what else am I going to do with this money that has been created? And I think it's that simple. There's too much supply of money around the world that continually drives down interest rates. Well, what gets it started? Things like we're in right now, where people begin to preach the economy's falling apart, and you see major pension plans, life insurance companies, sovereign wealth funds all over the world run to buy a 10-year U.S. Treasury bond, and it doesn't make any difference if it's 2 3/8% or not. It's, what else am I going to do with this money? I'm going to buy that. And it's a fascinating thing to see. It's not that simple for investors to say, and as we manage our portfolios, to say we're going to run do the same thing. No, if this scenario ever reverses itself, you could have horrendous losses in the bond market in a hurry. But for the moment, and in particular in the last 3 to 4 days, it's run by anything that'll pay you some interest at whatever price they want.
So it looks like we're back to volatility again that many thought we left behind in December. Given that, how are you positioning your portfolio these days?
Well, as we always do, we're looking for bargains. We're looking for things that you can buy that people are selling and therefore the prices are way too cheap. In that scenario right now, it's back to the bank stocks. And the thinking is low interest rates, the banks won't be able to lend the money at any type of decent interest rate spread. Therefore, low interest rates are really going to be bad for the banks. Plus, with the economy that's going to fall apart, they're not going to have any loan demand anyway. My God, sell the bank stocks. And they're back to selling the bank stocks. They're wrong about that premise, first thing, and they're selling the stocks down to where they're very modestly priced. We'll take advantage of that. We'll buy some more of them. Monitoring, of course, okay, what else do you want to sell and how cheaply do you want to sell it? Because if you do, we'll buy it for our portfolios at those cheap prices.
Okay, thanks, Joe. That's Joe Terrell, founder of Terrell & Company, independent wealth management with $700 million in discretionary assets under management. Joe, let's visit again in about a month. The earnings should be coming out for the first quarter. We'll see where that's taking us and get your insights then.
Yeah, that's going to be a big scenario because the bearish side of this argument about the economy is expecting corporate profits around the world for the first quarter to be very poor. I don't believe that's going to be the case. So it'll be very fascinating to see come the third week of April when corporations all over the world start reporting what they have to say, and also what they have to say as their outlook for the balance of the year.
Okay. We'll see you in about a month.